Good evening and welcome to Ackerman Financial's weekly market forecast. I'm Jake Ackerman. So we've seen a pretty significant sell-off following the inflation data report released on Wednesday. The S&P has been trending lower ever since that report. Inflation data showed significantly higher than expectations were. The only thing that stayed on expectations level was energy prices. Energy prices continued to decline, which is good for the economy. That's what we're going to need to see the rest of the inflation areas come down. So looking into that inflation report, and I want to keep this video along the lines of what that data means, what that means for monetary policy going forward. Monetary policy is going to dictate how our economy plays out here for the next 6-12 months. So looking at the data, being that it was higher, core inflation, which is inflation excluding food and energy prices, remains high. It was significantly higher than expectations. And then when we look at the inflation with food and energy prices, it was still above expectations, but just a fraction above. So I mean, we're still trending in the right direction. We're still seeing inflation coming down. It's still very high, but it's coming down. It's just coming down at a slower rate than expected. So what does that mean for monetary policy? Where we're still expecting a 75 basis point hike from the Fed next week. The Fed meets on Tuesday and Wednesday. We're going to see the data released on Wednesday at 2 p.m. So when we see the release of the data, Jerome Powell, who's our Fed president, is going to have a speech from 2 to 2:30. All eyes are going to be watching his speech. That is going to be a very important event to dictate what happens for the next couple months, because we don't have another Fed meeting until November 1st and the 2nd. So watching that is going to be important. We need to monitor his words, because right now, leading up to this inflation data report, the Fed has been very hawkish with their verbiage and language about monetary policy. And them raising rates is not necessarily a bad thing. We want to see inflation come down. What could be a bad thing is them over tightening. And that's what the market is trying to figure out, if they're going to over tighten. If they're going to over tighten, we're going to see some economical consequences. And that is a possibility that they do that to bring down inflation. But we're still seeing signs of deflation. So I don't know if they're necessarily going to do that. They may want to continue raising rates, just doesn't need to make it as aggressive. A good key indicator to watch is the 2-year Treasury. So right now the market has priced in an expectation of the Fed funds rate getting between 4.25% and 4.5%, which are, it's the market's already priced that in. The stock market, the S&P 500 is down nearly 19% as of today. So if they're going to exceed that because of the data, that's when we have some new problems. We have to reanalyze our stances. But as of right now, the possibility where the market coming down to around the June lows, maybe a little bit lower, maybe a little bit above it, are completely, that could happen. That's a high possibility for that to take place, since it just broke the technicals of an upward trend. So I would anticipate it's going to come down somewhere. Do we go significantly below that? That's going to be dependent on this Fed meeting on Wednesday. And if that does take place, shorter term investors, so your retirees, your pre-retirees, you might need to reevaluate things and be much more cautious. Give us a call. We're happy to talk to you about it. Talk to your financial professionals. For your long-term investors, if you have some extra cash to allocate, now's a good time. But again, talk to your financial professional. This is not professional advice for one individual. Every circumstance needs to be taken into consideration. That's just kind of what we're anticipating at this point. But again, seek your professional financial advice. So what we need to be watching again is that Fed meeting and where they're going to take monetary policy. If they're going to be data dependent, they might want to wait. And if that's the case, where we're going to be sitting in a good spot here. But again, tune in next week on Friday. We'll be talking about that Fed meeting. We'll be taking action before that, or probably right after that Fed meeting, depending on what they say. we'll let the market digest and make our moves from there. But be prepared for both sides. It's going to do you, it's going to do the greatest service. Again, hey, thanks for joining me today. Ackerman Financial Group's weekly market forecast. Expertise you deserve, experience you can count on.